This is Trading 101, hosted by the Bearded Trader.
I am the Bearded Trader. This is Support and Resistance. This will help you determine where buyers and sellers are stepping into the market, make better decisions about your trading, and understand how charts are formed. That said, let's look at two types of analysis. You got fundamental analysis and technical analysis. Now, fundamental analysis focuses on the value of a company. Those that use fundamental analysis are investors who care about PE ratios, profit and loss statements, earnings report. They care about the actual money the company holds. They care about dividends. They care about year-end statements. You know, that's the basis of fundamental analysis. Value investing is what they normally call it. But for me, I'm a technician. I care about price action. I care about supply and demand, about chart patterns, about candlesticks. You know, candlesticks are like the footprints that are left behind when price moves. You know, when you look at a footprint, you can tell if a person's tall, if they're short. You can tell how much they weigh, how long they've been walking. Same thing with candlesticks. Candlesticks can tell you where price has been, where price is at, and where price may go in the future. Us technicians like to use support and resistance to determine where supply and demand is. And at those points, we look for an imbalance between buyers and sellers. That helps us make trades. That helps us be profitable. So let's get into support. Now there's two types of support. You got horizontal support and you got support that's sloping upwards. They mean the same thing, but the functionality is a little different. Horizontal support is basically support that goes across the same price area through different time frames. Whereas support that's sloping upward is, price moves in a upward stair step momentum type fashion. Now, support is a price area. It's not an exact price. It's not like $5 is a support area. No, it's like between $4.50 and $5. Support. So when you think of support, think of a range. It's where stock has had a difficult time falling through. It is a level where buyers tend to enter a stock. They tend to increase demand at a particular area. That's a support. So if the price of a stock falls towards a support level, then the stock is going to test that level to determine if it's a true area of support. Now you must wait for confirmation. Now confirmation occurs by buyers moving into the stock, causing it to rise. If the price moves past that support level, in other words, let's say if price is trading at $5 and now it's trading at $4.90, $4.80, $4.70, it means that support level has failed and the stock is looking for a new level lower. When this happens, the support level can turn into a new resistance. So old support becomes new resistance. Support is the same as increase in demand, where buyers come into the market and they make a decision to say, hey, $15, I'm buying Snapchat. More people do that, then that $15, that becomes a support area where people say, hey, this stock is worth having at this price. That said, let's take a look at some charts. Okay, so when we're looking at support, we want to know where buyers are stepping into the market and if that's an actual level where people think the sentiment of the market is, or the sentiment of that stock is that, hey, at this price, I would like to buy. So let's take a look at Amazon and see if we can figure out where support and resistance is and whether it's horizontal or upward sloping. So what you're looking at is a 1-year daily chart of Amazon. We have a low price down here at $7.10 back in November of last year, and we have a high of $10.83 as of July of this year. So you can see if this is a yearly chart, this price right here, $7.87, is lower than this price right here, $9.67. So that lets you know that this price has gone up within a year. You don't need fundamentals to show you that. The chart can tell you that. If price has gone up, that means the company's doing a lot better than what it did the previous year. So let's draw a trend line, the upward sloping trend line, to show how support has traveled up in the past year. Now this is called the swing out method. You have a trend line, you swing it out till it touches the first low of a candlestick, and that's your first point. So as you can see, this is a upward sloping support line. Price bounced here to a low of 710. It bounced again. It bounced right here at 747. And as you can see, it has traveled upwards along this trend line. It has never broken this trend line. It bounced right here at 936, letting you know that, hey, this level, this trend line support, is a level where buyers think, hey, if the price touches this area, I want to buy. I want to be a buyer at that price. You also have short-term support areas, such as you can draw a horizontal line touching from this low candle to this candle. That's another area of support. Whenever you draw a trend line, if you touch 2 wicks to your trend line, that lets you know the area is confirmed. You need at least 2. 3 is ideal, but as long as you can get 2, then you're good. So we got a horizontal level support right here. We have a upward going or upward flowing level of support right here. And that's Amazon. Let's take a look at another one. Let's look at Bank of America. Okay, now you see Bank of America has this huge level of support going across around this $22 area. So every time it has hit this area, it's bounced back up. It's bounced back up. Bounce back up. Bounce up. Bounce up. This is what you call a range, a trading range, meaning Bank of America has been trading around from $22 to $25 ever since December of last year, when it entered at $22. It entered in this range at $22, and ever since last year, it has not gone higher than $25.80, and has not dropped lower than what's this, $21.77. So it's been in this trading range for almost 9 months. You got your support down here. You got your resistance up here. And Bank of America is trading sideways. So this is a horizontal area of support. Let's take a look at another one. Let's look at Facebook and see what see what Facebook is showing us. So we have another upward sloping level of support. Let's draw us a trend line from this low. We'll swing it out to the first touch. We get our first touch right there. That's our upward trending support line. You have we also can show a descending support line, which means price never broke this trend right here as it was descending or declining. That's a descending support line. So you could have said, hey, every time it touches this area, I want to buy. I want to buy. So that is a upward trending support line on Facebook. We also can show a horizontal support line right here on Facebook as well. You know, price action fell to a low of 113.55. Demand picked up at this area and pushed the stock back higher. So this area is a high area of demand. You know, As traders saw price fall to this area, they said, hey, Facebook is worth 113. I want to be a buyer down there. Every time it touched this price, traders or investors bought this stock back up. They bought it up. And as you can see, now it's at 172.09. It has not looked back. So that's Facebook. Let's take a look at one more. Let's look at Google. Let's see what Google's doing. Take a look at Google and see if you can determine where there's some areas of support and some areas of horizontal support and areas of upward sloping support. So right off the bat, you should see, hey, this right here is an area of support. Price could not move lower. It could not, price gapped up. This is a gap from here to there. That's a gap. Price gapped up, hit a new high. When it fell back down, it bounced right back up. And then every time it touches this area, it is bounced up. So this is a level of support. That's a horizontal support level. We also can show a upward sloping support level. Do with our little swing out method. Can either take, let's use these two right here. So we also have an upward sloping trend line, letting us know, hey, price is moving higher. We get our higher lows. So we got a low right here. Let me draw a circle on it. We get a low right here, low right there. You can see the lows are getting higher. Higher lows means price is increasing. Price is going up. It means demand is increasing as price goes up. Higher lows. This is an upward sloping trend line. So these are the basics of support. You got your horizontal support, you got your upward sloping support. Take some time to practice on drawing these levels. They're not exact prices, they are areas. Now, resistance, that's an area of excess supply. It is an area where buyers say, hey, I don't want to hold this stock at this price. I don't think Apple is worth $170, so I'm selling my shares. And when they sell their shares, that increases the supply on the market, causing price to fall. And at that point, you get what you call a resistance level. That resistance level is just the opposite of support. It is a place where many buyers and sellers come into the market. They converge at that price range to form a ceiling, meaning as the volume that came into the market, the volume was more people selling than buying. So as price got up to 170, it bounced off that resistance and fell back down. Now, if price is able to break through that area of resistance, then that area becomes new support. Old resistance becomes new support. So when you think of resistance, think of it as an area where seller said, hey, I don't want to own this stock at this price. I'm willing to sell it back on the market. I'm willing to put these shares back on the market, which increases supply, decreases demand, causing price to fall. Now that's resistance. So when you think of support and resistance, think of supply and demand. Think of buyers and sellers. Okay, so let's take a look at some resistance areas. We know what we're looking for when we look at support. So as it relates to resistance, we can actually look at this Bank of America. So we stated earlier that, hey, at this price, this was an area of support for Bank of America. Well, at this price, $25 is an area of resistance for Bank of America. We see we got this high at $25.80, but from December last year, Bank of America has not been able to go higher than $25.80. It's been trading sideways. Lets you know that, hey, this area, all of this up here, is an area of resistance for Bank of America. Buyers do not feel that this stock is worth $25.80, $26, $27. They feel this stock is worth $22, $23, $24. They feel it's worth this area, this range. So as buyers and sellers go back and forth, it's like a push and pull, tug of war type formation, to determine, hey, where is price equal at? And since it's equal between 25 and 22, this stock has been trading sideways, creating this horizontal resistance area. Let's look at Macy's, see what we have. Okay, Macy's, we have a downward sloping resistance area. So from 45.41, if you do your swing out method, we actually can come all the way down here. We see, hey, Macy's has been trending lower and lower. We have a high right here, then we have a high right here. The highs are getting lower. We have a high right here, high right here, high down here. So those areas show that, hey, when the market tries to push back up, and when this stock tries to push back up, buyers stepped into the market or stepped into this stock right here, 28.70. This was the area of support. They stepped in, pushed the stock up. Then they realized, well, nah, Macy's is not worth this price. We're not going to continue to pay this price for Macy's. And what did it do? It rolled back over. So this area right here that once was an area of support now becomes an area of resistance. Once it breaks through, this price range, this area is now an area of resistance. And what happened? It gapped lower, made a new low. Now you have another area of resistance, this 24.34 area. This area, every time Macy's bounces up 24.34, what does it do? It rolls back over. It bounces up, rolls back over, bounce up, rolls back over. So this is an area of resistance, horizontal resistance. Buyers do not feel that at this price, Macy's is a stock worth having. So what do? They sell. They've continued to sell every time it hits that price. That shows you the imbalance between supply and demand. So once Macy's was 45.41, there was an increase in demand as buyers came into the market and said, hey, now I want to sell my shares back. Supply started to increase, causing price to decrease. And as price decreased, that lets you know, hey, this area is an area of resistance. Now let's take a look at JCPenney. So we have another area of resistance. We got this top here, this 1074. Buyers felt, hey, this stock is not worth that price. I want to sell. And as people continue to sell, price continued to fall. So we have an area of resistance right here at 1074. We have an area of resistance right here at 743. And area of resistance right here, roughly 560 price. Now these are actual areas. Don't look at it, even though I'm drawing a line and it's showing a single price right here. Think of these resistances as areas. So if price bounced up, it hit this area, fell back down. Price bounced off some support right here, bounced off support, but once it broke through that support, now this support becomes new resistance. It couldn't push out of this area, and what happened? It fell back over. It found some support down here. It then hit that old resistance, this old resistance area. It hit it again, and what happened? It fell back over. And that's how support and resistance work. It's just showing you where buyers said, hey, I want to sell this JCPenney stock. whenever it gets back up to 560. And that's what they did. They sold their shares and it rolled back down. Or they said, hey, I want to sell when it gets back up to 740. They sold their shares and it rolled back down. So that's the basis of resistance. Resistance is an area where buyers said they wanted to sell their shares back to the market, which increased the supply of shares, causing the price to fall. So think of resistance as an area. Think of the correlation between supply and demand when you're drawing your support and resistance areas. This will help you be a better trader. Take some time on your own, go on your charts, draw certain areas of support and resistance. See if you can determine where buyers and sellers got into the market and become a better trader. I am the Bearded Trader. This is Trading 101, trading the basics of support and resistance.